Well, Bitcoin has been a little bit difficult to trade this week. The false move that we usually see at the start of the week was quite an obvious one, but following that, the trading range seems to be quite minimal. And this makes sense to me because we do have a high news event week coming up. So that's what I'm going to talk about on today's video. We need to get right into it because the news events start today and we want to take a look at the price action to see if we can figure out what to expect. If you are new here, welcome. If you're returning, welcome back. Be sure to smash that like button nice and early because it does help to get this video around the internet. My name is Annie and this is Trade Travel Chill. Let's go. Now, before we get into the price action, you may notice that I have a little bit of a different layout going on today. You'll see me on one side and the chart on the other side. I'm just trialing this out and I kind of need your feedback on it. Do you mind if it is this way? I'm trialing this because it will help me repurpose this content to use on other social media platforms. But if it's annoying to you and you're like, Annie, less of your face, more of the chart, please, then just let me know that in the comments and I will change it back for the next video. But for this video, this is what we're basically going to be dealing with. So let's get into it. As always, I'm going to start on the higher time frame. I'm sorry I couldn't come to you at all this week. So far, I've been terribly sick. As if you've been here a while, you know it happens to me from time to time. There's nothing I can really do about it. And I just happened to cop it again. So I am seeing the light of day again today for the first time this week and taking a fresh look at the charts. I'm not in any new trades myself this week because I just was not able to focus on price action. But I also, I'm okay with that because I do know that we have the news events starting from today, basically. Let's have a look at what those news events are. PPI coming out today towards the end of the UK session. Tomorrow we have CPI coming out, and then on Thursday we have unemployment claims. Every single one of these events is in the last hour or so of the UK session. And if you understand this trading method, then you know that the last hour or so of each trading session sets up for what is going to happen in the next session. And when there's a news event, that news event is usually used as the excuse to move price in a direction. So every single one of the UK sessions this week essentially is a really, really important kind of period of time to be around and be on the charts if you can. And if you can't, it's just take the week off. It's not really going to kill you. So we'll get into more detail about those when we get to lower time frames. I just want to take a quick look at the overall daily time frame. And I just want to point out where I think we are in the model on the daily time frame. It doesn't always feed up this high, but this is just a bit of an idea of, kind of what I'm watching for and where this should lead me next if it turns out to be correct. So if you know this model, you know that we trade in levels, 3-level rise, 3-level drop, reversal formations in between. So when I follow that model, I can see through here that this was 1 drop, this was 2, and what happened recently was the 3rd drop. But within those drops, when you're on higher time frames, you should see 3 spikes in that direction. So if we're dropping down, you should see 3 high volume areas that drop the price. So I've pointed that out here. So within level 1, you can see these magenta candles count as 1, these count as 2, and this counts as 3. So that basically helps you to qualify the level 1 drop. Okay, then you have your retracement and the same thing here in level 2. Now, when I get to the level 3, I can only see 2 here. I don't count the reversal candlesticks. So this one doesn't count. We count from here where it drops through EMAs. So I'm only seeing 2, and that's making me very, very skeptical, but also I'm really conflicted right now with Bitcoin's price. And I have to be honest with you on that because if you watch my social media, you will know that I had been calling for 51K Bitcoin for a long time. 51, 52 was kind of my region. And this candle here took it out. So it did really wipe out a lot of liquidity. It did the damage that it needed to do. And now it's a matter of is that it? Is that as low as we're going to go, or are they going to come for lower levels further down here? And where my mind is really sort of not confused, but just waiting for more information is just trying to understand what liquidity is available below the current price. So when we go to high block and we use this 3-month liquidation heat map for Bitcoin, the yellow areas show the highest amount of liquidity. And when you look at this, the yellow area is above price. So we are going up eventually, guys. Price is going up and is going to break its current all-time high. The question is, Do we go down more before up, or are we up from here and we need to start buying in? When I look then to below price, I don't have any yellow areas left. I don't even have a yellow area that would create, a W formation. So that's what's making me really conflicted, is if the market maker is after liquidity, which is what they're always after, there isn't much reason for them to drop price much lower. However, price is not giving us a strong bounce either. So all we can really look at is the data that is there, and just be mindful that, whilst I've marked out this liquidity zone here between about 46 to 49, when we look at high block, that's these kind of green areas here, which if you look up, green is around here, right? This sort of level. So it's high, but it's not super high. It's not anywhere near the liquidity that we've got above price. So we really do have to be prepared for price to potentially just break out or break down, because breaking down will bring liquidity. And the conclusion that I draw from that is not a trading one, it's an investing one. The conclusion that I draw from that is there's no guarantees that the market maker right now needs to drop price further, but they can if they want to, but they don't necessarily need to. And that, to me, considering we wiped out a very large area of liquidity, you can see it here, right? That was what was available, and that was my target before we had this drop down here. So considering we've already wiped that out now, the liquidity below price is gone, and therefore to me that means any significant dips that we have from this point on are opportunities to buy for the long term. This to me signifies the time to be building your portfolio, your spot portfolio. And I don't mean this week, I mean any significant drops we have maybe over the next couple of months. I don't think that they should put the fear in you that this one put in most people, okay? I also just don't think that you should just go all in, so just whatever things that you want to have in your portfolio, just create a plan to slowly buy into those things. Average in slowly over time. Always check the coin that you want against Bitcoin. Just make sure it's not still massively bleeding out against Bitcoin, because then there's an opportunity cost there. If they're just flattening out there, or they're looking like they're starting to change the structure, that's probably a better time to buy your altcoins. But as far as Bitcoin, over the next 2 months, let's say, anytime it has a big scary drop like it did the other week, I think will be a good time to add Bitcoin, if Bitcoin is something that you still want to buy. So when I look at price action alone, then what I'm still waiting for, considering I can only see these 2 hits down here, is either a third one, because at the end of the day, we did move up, we did reject the 50 EMA, we haven't yet been able to close back above it, and these current candles are looking like they want to close below the 200 EMA. So this could turn out to be a retracement that ends up creating a W formation, which I've talked about on this channel that I would be waiting for in order to turn bullish, or it could turn out just to be a full reversal that comes back to take this lower level of liquid, like the only thing that's left, essentially. Here's an example. If you were dollar cost averaging into Bitcoin and you didn't know which one it was going to be, well, why wouldn't you buy some where you thought the second peak was going to be? And then if it dropped lower, you buy more in this liquidity zone. At the end of the day, that's going to average out. That's just an example, but that's going to average out to about a $52,000 big. That's still cheap, if you were to do both of those buys. So I don't think this is the time in the market to be trying to time it exactly and go all in at one price. I think the price action is showing us probably not going to get it right if you try to time it. So you're better off just having a plan that works over the next 8 to 10 weeks. Divide your money up over that period of time and over whatever it is that you want to buy, and just slowly make those buying decisions, and then just wait, just wait. Because even if you start buying and price keeps going down, as long as it's not making lower lows, and like I said, it's not bearish against Bitcoin, the only time that I think you would probably hold off and not buy any more Bitcoin if it kept dropping lower would be if it broke below the yearly open, so about 42k. If it broke below 42k and closed below, and we stayed below for a long period of time, we'd have to reassess the whole bull market, I think. So let's not hope for that. Now, when we're looking at the 4-hour time frame, we do have our 3 level drops that took us into that final move to the downside. We've had a bit of a kind of V-shaped recovery out of there, have not managed to break above the 200 EMA yet, and we are below the point of control, which is at about 60,700-ish. We're dropping below all of the EMAs as well now. Like, price is back below the 10 EMA on the 4-hour time frame. So what we would need to watch for on the 4-hour time frame is what happens in the remainder of the vector candles that were created on the move up. So the remainder of this vector candle becomes our area of interest. The halfway mark of that candle sits at about $58,060, and that is where price has been wicking into multiple times so far. So if the price breaks below that, we would expect that it's next going to go for the bottom of that vector, which is at about 56,700. And if it breaks below that, then we're gonna have to watch to see what happens in the last trap trader zone, which is a very big zone because it was a very big candle, and that's between about 49 to 54.5. So we would be watching the top, the middle, and the bottom of that area as well. And you can use the VRVP to kind of help you define your targets, because usually it runs to one of the larger spikes. So this large spike kind of lines up with the top area. This one out here would be the next one, and then below there I think we're in trouble. So I think the 4-hour time frame is very, very telling right now. We want to see how the price reacts in this area of interest first. I personally would like it to break down further, because I think it will just give us a cleaner 4-hour W formation potentially if it holds somewhere in this area, and that's going to give us a better risk to reward anyway. So I would be quite joyful if we actually did break below this one and we came back into this one a little bit. If you want to trade cryptocurrency, you need a crypto exchange to do that on. With regulations tightening worldwide, many crypto traders, especially those using leverage, are finding it increasingly difficult to access exchange platforms. That's why 𝗟𝗶𝗿𝗃 has partnered with Blofin Exchange, offering you an easy solution no matter where you're located. By joining Blofin through the link in the description of this video, you can unlock a massive 20% trading fee rebate on all your leverage trades for life. Plus, Blofin comes with some other unique advantages. They have no KYC requirements, so your privacy is protected, no internal or sister company market makers, ensuring a fair trading environment. Blofin doesn't share its order book or liquidity with large exchanges. You can also choose from over 330 futures trading pairs, and to top all of that off, they have superior customer support. As an exclusive bonus, if you create your Blofin account using the link in the description of this video before August the 26th, you'll also earn 10% cash back on all your deposits. For more details and terms and conditions, check the link below this video. Don't miss out on this incredible opportunity with Blofin. Start trading smarter today. Now, moving on to the 1-hour time frame, this was really kind of perfect actually. Last week it was perfect. When price broke down, created the W formation, we moved back up to the upside. This whole area here was 3 high volume vectors in a row. So that whole area became the area of interest, and price returned to it once here. So that created a little bit of a V-shaped recovery, which is what turned people very, very bullish. And then when we have a look at the weekend price action and how the market maker traps you, you can see here that this was the weekend trap box, which is essentially where price just consolidates. It's usually low volume and price doesn't really do much. However, before we went into that, we already had trapped traders. We had them trapped up here because this was the last peak formation high that ended up creating the high of the week for the current week. But this was the last peak formation high, which actually happened in the dead gap zone between Thursday and Friday. And then Friday moved price away from it, and then we went into the consolidation. So when you're assessing this price action on the weekend to get an idea of whether price was going to start the week going up or down, what we really wanted to do is look for stop hunts outside of this box zone, but stop hunts that didn't release the existing trapped traders. And that's exactly what we got. We got this one stop hunt here. It was a very obvious one, very large wick that broke outside of the weekend box, but it did not allow the very top traders of this candle here to be released from their positions. However, anyone that built a short bias over the weekend, maybe because they thought this was resistance and had stop losses or were 100x traders or whatever, they would have got stopped out before ultimately the price actually went their way. And this is why you really have to wait for the false move week beginning before opening any weekend trades, because that's a typical trap. And I noted that on my X account on Sunday when I realized that I was in no physical condition to be able to do a YouTube video, to be aware of this stop hunt, that may actually be the false move week beginning. And the trade on this was immediately after you saw that candle. Why? Because usually when you see the false move, you wait then for the lower high, and on the lower high you would take the entry. But no, you need to zoom out in this situation because the peak formation was already created. So the M was actually here, and then that did eventually take us down. Now, if you know this method that we trade on this channel, then you know that that false move is usually just a one-day move, and we need to look to the session changeovers for potential changes in trend on the Monday. If they don't come on the Monday, we'll look for them on the Tuesday. But we had some problems this week because Monday had a bank holiday in Japan, which meant the Asia session it's either going to be unpredictable or sideways and boring, which it decided to be sideways and boring. And then if we go down to the 15 minutes so we can see these session times clearer. So this was the Asia session, right? Bank holiday, everything closed. Between the gap, we got a hammer, which, you know, that could be somewhere to open a very high risk advanced long position, because what you understand, if you understand these hammers that come as stopping volume candles, which is what this one was, you understand that the goal is to stop out anyone who took a position in consolidation. But you have to understand them in the right part of the entire method, right? Otherwise you see them everywhere. You would have seen one here, you would have seen one here, you know what I mean? You can see them everywhere here as well. So they only count in the right part of the actual method, and between a session changeover, it kind of does count. But look how volatile the price action was on Monday. After this move up, you would have had this really scary move back down at the start of US, and then another move up. And then now when you look at today's price action, like, we've essentially done nothing. I don't even know how you count these levels. I don't think these levels are countable on the 15-minute time frame right now, because they're just absolute chaos, and that chaos leads me to believe that there is very strong manipulation going on leading up to our news event. So I think the better time to trade this week is going to be post news events. One of them is going to trigger something significant, and usually the news events that move the market are the PPI or the CPI, because they're the ones that kind of deal with inflation, which is all anyone has cared about lately. However, we have an economist that is part of our team at Trade Travel Chill, and I just want to read something to you that he said that I think is very significant and we should definitely pay attention to. He said, with the above said about CPI, the market is now shifting its attention to US jobs and less towards inflation. The market was worried about paying more for goods when everyone had jobs, but as unemployment increases now, the market is more worried about the fact that people won't have any money at all to spend on goods. Credit card balances and delinquencies are going up, showing that the US consumers could be starting to become maxed out on savings. Thursday's jobless claims will be another major news event to watch this week. So that is, this one here is the significant one that he is talking about. We have to be alert for every single one of these news events. So for me personally, I think Bitcoin is a little bit untradeable at the moment. It's a bit of a watch and see what happens kind of situation, but whenever we are in these situations, it is the perfect time for you to plan ahead on a macro level and make decisions for long-term investing. When we have a look at the closest liquidity that we have to price and the most recent, it does look heavier to the downside than to the upside to me. So there is still potential to revisit, say, the 55, 56K region. If we did come down there, again, I would be dollar cost averaging. It's not advice to you. That's where I would be happy to buy a little bit more Bitcoin. And also that's where I would start looking for those macro time frame pivots. Even though we had this one kind of strong handle, when you have one strong handle, and then you have no follow through, that's usually just a liquidity hunt. So you can't really rely on that as a trend change. There has to be follow through when you see these high volume vector candles, and at this point in time it looks like we're almost coming back to 100% reset. So it's tricky to say, but I still want to see price come down to 55, 56K. I'll feel better if we came down before we went up. Let's have a look at our heat map orders for Bitcoin to see if there's anything that is providing us a resistance or support level. I can't see anything above price. When we zoom in on below price, we do have one area here at 57,600. So these would be long orders, hoping to buy the dip essentially. This is on futures, by the way, not spot, which, by the way, this move up on Bitcoin that we did have, it was mostly spot trading as well. That's why the leverage wasn't being built here, because people aren't going long on leverage, they're spot buying. So then that just adds a whole other factor to it, because it means people see this price action as a buy the dip moment. There's still risk on, they're still happy to dollar cost average or whatever they're doing into it, but traders, leverage traders, aren't necessarily feeling that this is the area to open a long position yet, because we're not building liquidations below price. So tricky. It is tricky. We still have very significant orders down here. So a very quick explanation if you're new here. What I'm showing you right now is heat map limit orders. It's showing us where the largest orders are when they're colored in the red pinky kind of color. It's showing us where the largest amount of limit orders are currently placed in the books. And as a trader, you can use that to identify where the price might pivot. If the large areas are below the current price, they can only be limit long orders. And if the large areas are above price, they can only be limit short orders. So you know that if you see 622, for example, in this box right here, that means that there is 622 Bitcoin worth of orders sitting at $47,500. That is an extremely large amount of money. So we would assume that not to be your typical retailer. That is probably some market maker algorithm. And if price did come down into there, we would expect some sort of a bounce, and then you use price action to determine if that bounce is a pivot and the trend is going to change, or is it just a short-term bounce and we're coming down for lower levels. So we need to keep an eye on this whole area, because there are very large orders there. But the reason that I took you through that description is because whilst they are limit orders, you have to know, just like price can be manipulated on a chart, they can also be manipulated in heat maps. And usually when you see orders sitting here for a very long period of time, so each one of these boxes represents a 4-hour candle close, and usually large orders won't sit there for more than a day. But when they sit here for this long period of time, like we're going all the way back to the 5th of August, they can be manipulation to make you believe, as a retail trader who understands heat maps, to make you believe that price is definitely going down there, so therefore you don't buy, and then maybe it won't go down there and you miss out, and then that causes a whole other level of panic. Or it can be that price will come down there, but right before it hits that order, the price gets pulled away. They cancel their limit order, because you can do that at any time before the order gets filled, and that causes price to drop through even further. And if you as a retail trader think, oh, I'm going to front run this order, I can see a massive order at 47,500, so I'm going to buy at 47,550, I'm going to get filled, then the market maker gets filled, and then we bounce. If they pull that order, now you get liquidated, because price just keeps dropping down further. So you have to understand the whole sort of way that heat maps work, and it's not as simple as, oh, there's an order there, so we're going to bounce. So I just wanted to point that out, because these orders have been sitting here for a very, very long time. However, if we do break the most recent low and start to head down further than that, then we're going to want to keep an eye on the 47 to the 47,500 range. And that is going to line up with this daily time frame liquidation zone that I told you about on the daily time frame a little bit earlier. Now, these levels do seem extreme, so I'm not saying we're definitely going down there. It's not something we have to worry about unless the most recent ones get filled and price doesn't bounce. So we have to worry about 57,600 first if we head back towards that level. But this is why I say, like, always, if you're going to slowly buy back into the market, just always make sure you have dry powder. Keep something on the side for those big scary liquidation events or just random news that you didn't see coming. Just always keep money on the side, because if we had a very fast move down to that 47k area, that is going to be a really, really good opportunity to, again, dollar cost average. So don't put yourself into a situation where you've offloaded everything that you have and then price just keeps continuing down and you cannot take advantage of that and you end up in a really big, scary drawdown that makes you panic and fear. Always keep dry powder on the side for big, scary liquidation events, and just know where we are in the cycle, because every liquidation event, in my opinion, from now till, the next month or two, are going to be good buying opportunities for the right things. And it's just up to you as a trader and an investor to decide what those right things are.